Good morning and welcome to the show for Tuesday, the 17th of February. We are back to normal service after the US holiday yesterday, and it's a somewhat risk-off morning across the board, which we'll come to in a second. But first, good morning, Axel.
Good morning, Chris.
How are you?
I'm all right, thank you.
How's things going? How was yesterday?
Pretty boring, wasn't it?
Yes.
I mean, not much going on. When the US is not in, not much is happening, really.
It's essentially a write-off,
Yeah.
isn't it, really? Which is, as we've seen, because if you look at, say, US futures, they were up yesterday and they're down this morning. So it seems like, well, normality has returned, really. Volume has returned. And so maybe you'll get a bit of uncertainty as we go into the beginning of the session. Certainly Dow futures down 14,418. A slightly risk-off session you can see across the board there this morning. FTSE 100, by contrast, in the first minutes of trading, pushing higher. And that is, I think, partly down to the fact you've had UK economic data this morning. You've had unemployment figures coming through, and that shows a worsening of the employment situation and a slowdown in wage growth. So that has sort of put pressure on the pound early trading this morning, hasn't it, Axel?
It has indeed, yes. And obviously we're now expecting rates to be cut even more than beforehand.
Yeah, not particularly much faster, but certainly more rate cuts. I think it's still 25 basis points expected at the next meeting, but a greater likelihood of a move for that one. If we look this morning in terms of news, we've had Antofagasta. Well, let's look at the rises and fallers first. Let's go to those, see what we've got on the list. Intercontinental and Antofagasta with two big rises. And there you are, slap bang at the top of the index. Unfortunately, the chart's slightly broken because of the madness in the price action at the beginning of the year when Intercontinental was briefly down 99%. That's a share consolidation as far as I can tell. But that, I think, is not quite a new record high for Inter this morning. Yes, it is. New record high. Intercontinental Hotels this morning. Just going to find the numbers for those. We had, what did they have? Revenue was up 7%, 6% underlying. Operating profit was up 13%. Total dividend was boosted by 10% to $1.84.5 per share. And a very solid set of numbers from what we can see, and expecting adjusted EPS of around 12 to 15%. So good numbers there from Intercontinental, really.
Yeah, looking really, really good. And also the chart beforehand already looked quite bullish. Yes, just continuing its ascent, which is pretty nice. Otherwise, it's pretty mixed, isn't it, if you look at the rises this morning?
Yeah,
not much.
A full list. Intercontinental, Airtel Africa up, Pearson, Relx still clawing their way higher. Experian and Compass. I'm trying to find where Antos is in that list. If we go to down 1% in initial trading, you see, although already off the lows in opening trading.
Yeah.
So it's a good time to be a copper miner, of course.
Well, you say that, but in the very, very short term, if you look at copper, the copper price has been sort of trading sideways ever since it's come off its highs a few weeks ago. And it's sort of holding its support. You can see here these lows from early February, which are for me the line in the sand with the late December lows. That sort of area should hold here. It's not that far away from where we are now, but as we can see here, I mean, the copper price is at high levels, let's face it, so definitely helping miners, that's for sure. But the uptrend we saw previously, the very strong uptrend on the monthly chart that we can see here, seems to be coming to an end, because we've had, I believe, 6 consecutive months of rising prices here. We're very, very strong. A very sharp ascent to the upside, and right now we're just consolidating a bit, which is totally normal. But we may see something happening, what we saw back in 2021 and 22, where we sort of, trying to reach new tops, and then in the end we just run out of steam. But we're not there yet. I mean, right now it's still looking bullish, but less bullish than last month.
And so that long shadow on the candle from on the monthly candle shows you there's been quite a bit of selling above those record highs.
Exactly, which is why, to me, it looks a bit toppish. But as I say, my line in the sand for long positions with regards to take profit stops, probably below the late December low. I think it was made on the 29th of December or something like that. If we were to fall through there, we may see a consolidation which takes us further down. But right now, it's still looking quite good.
Yeah, revenue numbers from Antos, just to run through those. 30% rise in revenue to $8.6 billion. Earnings are up 52% to 5.2 billion. The margin shot up from 51.8 to 60.3. So these are kind of numbers you expect to see across the board, I think, from miners this week, really basking in this commodity boom. We've waited long enough for it. I've lost count the number of times someone told me that we're on the beginnings of a commodity super cycle. And of course, they've doubled the dividend as well, more than doubled to 64.6 cents per share. So you can understand why there's a lot of enthusiasm around mining stocks at the moment, and set to continue maybe. I mean, a lot of the good news is in the price at the moment, dare we say it?
Well, if we look at the charts, we can see that we have similar patterns on gold and silver. Well, we had these surges to the upside, these exponential advances, and now we see a consolidation. But if you look at the mining stocks, the trend is your friend. So from that point of view, yes, I mean, would I buy up here straight away? Perhaps not. Or if I were to do so, I would have a tighter stop than beforehand. But yes, as I always say, the trend is your friend, and they're still looking good.
Speaking of overextended, the Rio Tinto, of course, reports later in the week. That is a definition of a lovely uptrend. Not much to dislike about that performance in September, of course, but it does, you begin to wonder at what point this gap between the price and the 50-day starts to matter, really.
It's pretty far away, isn't it?
Yeah.
But yes, I mean, it still can continue and go further. You never know where the top is. I mean, it's always with hindsight that you know, oh, you know, that was it. But the further you move away from your moving averages, the more overextended the advance is, and the more likely it is that you might see a corrective move against the trend, at least in the short to medium term.
And it's that idea, as you said, of maybe not buying it up here necessarily, just because it just looks. And human intuition being what it is, things look high, but they can always go higher. But you can certainly say that the last time we had a sort of gap this wide between the 50-day and the price, it did drift down. It doesn't have to collapse, does it? It doesn't It doesn't have to slump, but it needs to sort of ease off some of that distance. It looks. My favourite thing is one of those sort of looks a little frothy at these levels.
It does indeed. And also, I mean, what you need to do then is, when the news is not as positive as anymore, and you have had that correction, to then go long again in the direction of the trend, which a lot of people then don't do because they think, oh, the news is actually not that positive, and they suddenly get scared off, whereas they would have quite happily bought it at higher levels previously.
And then you look back at it 6 months later and think, why didn't I buy it down here? And you forget the emotion at the time. It's obviously, you have to put yourself in that moment. One that is worth watching perhaps is NatWest, because we got absolutely clobbered here over the past couple of weeks. And yesterday we were up, I think, 6% at one point, which is not often you see a bank in the UK up 6% a day. This is the kind of thing I suppose you want to see in an uptrend. That it's, if I get rid of my measure.
Yes, the only worry I have here is that the descent has been quite steep. So the question now is, on this movement back up again that we're seeing at the moment, can that continue? Can it take us back to these highs? Or are we going to fail around the early January lows again and then come off again? So it really depends then on where the next peak is within that pattern. But right now, as you correctly say, Chris, we've tested support going back, I think, to November, December. Those lows bounced off those. And right now, the trend is still your friend. Medium term still looking upwards because it's still a series of higher highs and higher lows.
Yeah, there's relatively constructive price action on that basis at the moment anyway, I should think. And still trading only about 9 times forward earnings for NatWest.
So still cheap, isn't it?
Not particularly expensive at those levels. It's a bank, has its own perhaps issues, but also looking in a much more healthy position than it was just a couple of years ago, really. This week's data, or rather today's data, after that UK numbers this morning, you're expecting Canadian inflation at 130, and then just the Empire State at 130 as well from the US. So slowly easing themselves back into the week, really, isn't it?
Yes. I mean, I think everybody will be looking at GDP data on Friday. But until then, we haven't really got that much out of the US.
There was a story this week in the FT, or yesterday, in fact, in the FT, that bearishness on the US dollar had reached its highest level in, I think it was a number of years, put it that way, among fund managers. The Bank of America survey, which I haven't seen the charts from them yet, but showing that people are very bearish on the US dollar. Is that going to become something of a contrarian long? Dare we say people's sentiment has reached a peak here? They've piled into short in the dollar, or they're not exposed to the dollar. Is that maybe a sign that things are on the risk of turning, shall we say?
Perhaps. I mean, if you start seeing headlines in the press, basically, then quite often it seems to be the end of a movement if everybody talks about it. But just one in the FT is probably not enough. So I'd like to see more. I'd like to see the same story on the headline of the front page of The Economist, for example, and things like that.
Yeah.
But also you will see it in the price action. I mean, right now, if you look at the dollar, it's actually doing not much at all.
No, it's hovering above those lows from July and October, September, I think that is, but moving sideways essentially.
Yeah, so what I would like to see is a trend line break from those highs in 2025 through the highs in January. If we were to sort of manage to rise above the January highs, then perhaps the technical picture will change. But unless that is the case, if you look at it here, look, we still have a downtrend. Even going back to October of last year, it's a series of lower highs, lower lows. That's the definition of a downtrend. So right now, I wouldn't try to aggressively buy the US dollar here, to be honest, not from a technical perspective.
And then I suppose, apart from that this week, you have Walmart reporting earnings, and that's about it really on the earnings front. So it's slightly beginning to calm down after the busyness of the first 2 or 3 weeks of earnings season.
Yes, and we've got Nvidia next week, haven't we?
Next week.
And that's more or less the end, isn't it?
And then essentially that wraps up the season, I think, at this point. We should cover gold itself, of course, down 1.4% in trading this morning, because it's another one where we've come under a bit of pressure. Maybe with the lack of liquidity around the weekend and the US holiday yesterday not helping matters, but just not holding on to those late Friday gains, really.
Not really, but at the same time, we seem to be holding above last week's lows. So, nothing is lost yet. We'll have to see where we close today, because another risk that a lot of investors don't realize, especially traders, is that you can't interpret a candle whilst it's still forming.
No.
So you wanted to, on the daily chart, to have closed that chart, and then you look at it tomorrow and see whether the pattern is actually negative or not. Are we holding at that support or not? Right now, we seem to be bouncing off it.
How often is moving too early a problem for traders?
Very often, I would say, because quite often people will just anticipate what they think is going to happen next and trade that instead of wait for what the chart is actually telling you what is happening at the moment. So yeah, don't try to front run what you see in the charts, because there is a reason, especially intraday patterns are not as valid quite often as daily patterns. Because there's a lot of volatility going on. It could be just completely random data pushing the price action up and down, and it looks, you can see patterns in anything.
If you look hard enough.
The human mind will do that. We'll actually see things where there aren't any. But that's why I sort of try to just interpret the trend. Do you have a series of higher highs, higher lows? Yes or no? Are we in an uptrend? Yes or no? If so, fine. What about the next bigger time frame? Is that also pointing in the same direction? If it is, I'm interested in going long, for example, if it's an uptrend. But yes, don't jump the gun, basically.
It's all too easy to do, really. I suppose the hunt is for trying to find those patterns before the people want to try and find them before they emerge, and the idea that you can then capture that move. Really, it's a very dangerous thing to do. Silver prices down a little bit this morning, 1.8% lower. So just, unlike with gold, you are seeing more of that drift lower in silver that just continues to eat away at these bounces. The bounce gets weaker every time, doesn't it, really? Yes,
and the down moves, the candles to the downside are still longer than the upside ones. So it is looking a bit fragile here, to be honest. And what we've seen so far is sort of a big candle at the beginning of February, back up to the upside after this big red Marubozu candle to the downside. But then we had 4 days of rising prices with very small volatility, little volatility, and then another big candle down. And now we're seeing 4 days of sideways trading, and we could see another big candle down. I don't know, but it's looking more fragile than gold.
Well, you were right on Friday, on Thursday and Friday. Thursday morning you were saying beware another leg lower, and you were duly proved correct on that, really. So we have... whatever the crystal ball you're using is, can we borrow it, please? So far, and on the fallers, we don't looking forwards, FTSE 100 fallers, Antofagasta firmly down 3% now on the downside, so surrendering even those brief gains. Fresnillo also under pressure, not surprised, 1.9%, and Fresnillo and Devon Mining always tend to move together at the moment, given they're both gold and silver miners, so also weakness there.
But that's not surprising, isn't it? Because if you look at the gold and silver prices, I mean, they're both coming off. So,
After huge gains, of course. Fresnillo, as I point out every time it mentioned, it was.
What is more interesting for me is Rolls-Royce, for example, coming off today. Because usually that is a stock which has done tremendously well over the last few years. and it's just tried to break out here, and you can see it struggling at that resistance from the January high. So that is interesting, technically speaking, because that could indicate that perhaps we're struggling here and we might actually consolidate. If we break above it, new all-time record highs will be seen.
Because the problem for Rolls-Royce, BAE also down, Babcock, so defence under pressure this morning, simply because I suppose, as you often hear this phrase in markets, the good news is in the price, isn't it? And that if you're looking at these defence firms, the fact that there is expected to be huge increases in defence spending, particularly in Germany, but also even in the UK, we know this is going to happen. It's the question of how does that reveal itself over time? So a lot of these defence stocks have enjoyed huge. You've never seen defence stocks rally like this, at least not for a very long time. They've enjoyed huge gains, but now they're treading on elevated valuation numbers. I think whatever the PE for Babcock BAE is, if I can find it, 31 times earnings for BAE, 44 for oil, just looking to tech stock kind of valuations, and that's the backward-looking PE ratio as well, I think. So it just means that you have to continue to announce good news to keep the share price going.
Yes.
And that's a major problem, I think, if you're expecting Rolls-Royce to do what it's already done, which is to go from, where were we, £5 a share back in early January to £12 a share. That is that now. Yeah, nearly tripled in just over a year. Well, more than double, to put it, let's be fair. But all of the news that we're seeing is already essentially accounted for by the market. When you're trading at 44 times earnings, you have to then say, well, what else have you done that's going to make it go up further?
Yeah.
That's the major problem for these stocks.
But having said that, if we do make a new record high here above the January high, the trend is your friend, as I keep saying. I know I'm very boring, but...
Well, no, but it works, doesn't it?
Yeah.
The trends always go on longer than you expect. Anyone trying to short the NASDAQ will tell you this, will have the scars to prove it, that you think it's gone up a lot, it therefore can't go up anymore. And yet it does, because the lesson of markets, even the S&P, is that winning stocks tend to keep on winning.
When there's a reason why there's this momentum behind those winning stocks, and it's more likely to continue than
exactly, and they're more driven higher. Whereas the temptation is to say, well, it's too expensive now, you've got to call the turn. You can see, if you look back in the past, things like Motorola, Vodafone, when they were flying high and then they suffered. The comparison last week was Alpha, wasn't it? Because it issued a 100-year bond, and someone pointed out the last company to do that was Motorola, and it didn't end so well for them, to say the least. But it's too easy to draw the comparison. What's important is then what happens in the actual market, isn't it?
Exactly.
What else do we have this morning? I think we just do Bitcoin. It was also
boring. I mean, nothing's happening. Just staying below $70,000. You can see here we're just trading sideways. Very little momentum, very little volatility. I think people are no longer interested in cryptocurrencies at the moment.
It feels like a lot of the bandwagon has moved on, doesn't it, really? It might be heresy to say it, but it is. I think it was one of the Bloomberg guys was saying a lot of the attention has simply gone to AI. It's simply moved on. It's not in cryptos anymore. Cryptocurrencies were once the frontier of financial development, and now it's AI for various other reasons. And this is where you're seeing the activity. So I think there's a loss of interest more than anything else, and not helped by the fact that gold and silver have done so well over the past 2 years. So Bitcoin, 68,000. I was probably just check on Ether as well to see where we are on that front, because they've been
a very similar chart
better,
there,
but not much different. No.
Yeah, they all look the same basically.
Yeah. All below the 200-day moving average. It was Paul Tudor Jones, bad things happen below the 200-day moving average. Yeah. So it's kind of almost guilty until proven innocent in terms of the downtrend, really. We had the big flush lower over the course of late January, but there just doesn't seem to be any appetite to buy at these levels.
No, definitely not. You can see that in the price action.
So that's what we have for the day. We've got US futures beginning to pare back some losses as we go into firmly into 20 minutes into the FTSE cash session. So we'll see where the futures can recover as we go first today. I should point out, to be fair to our European cousins, the German ZEW index is at 10. So if you're trading the Euro stuff, that will be of note as well. But as I say, inflation from Canada and then Empire State Manufacturing Index for the rest of the day, and a couple of Fed speakers also this afternoon. Thank you very much, Axel.
Thank you, Chris.
Thank you, everyone. We'll see you tomorrow. Bye.